Hey guys, a very warm welcome to a super interesting episode of the Fisdom Wealthcast. With us, I have an extremely special guest. We have Varun Sharma, who is the fund manager for various funds for Franklin Templeton Mutual Fund. But for our conversation today, I'd like to highlight he is the fund manager for Franklin Templeton's Technology Fund, while he also leads the research piece for FT on the tech side as well. So, Varun, a very warm welcome to the Fisdom Wealthcast.
Thank you, Nirav.
So, Varun, there's this one question that I always ask all of our guests, and I will start this conversation also in a very similar way. एक सवाल होता है जो हर इन्वेस्टर के मन में हर पल होता है, चाहे मार्केट तेजी में हो या मंदी में हो, कोई फर्क नहीं पड़ता। एक सवाल हर बार चलता है और एक सवाल होता है जो उन्हें हर मार्केट एक्सपर्ट से पूछने की इच्छा होती है। वो सवाल है कि मार्केट क्या बोलता है, राइट? सो
Mhm.
व्हाट्स योर टेक ऑन दिस? आपके हिसाब से मार्केट क्या बोलता है? एंड वेरी स्पेसिफिकली इफ यू कुड, because you specialize and you're an expert in the technology segment, while you can share your views on markets at a broader level, also flesh out a little bit more on the tech side of it.
Sure, Nirav. So, see, I know things can get very complicated, but fortunately, things are very simple also. If you take a slightly longer term perspective, right? Markets have cycles. There are times when markets are going up. When you say bazaar tezi mein hai, right? And there are times when markets consolidate. Um, Currently, I think the good part is that we are in a phase where there is some bit of consolidation that's happening, and you have to pick stocks as usual. I think the nature of our research, the nature of our investment in markets, that will never change. So you have to keep looking for value. कहाँ पे stock prices में you see value, you keep on investing. Uh, this There is a little bit of dichotomy, I will say, currently as to what's happening because India as a nation, as an economy, is on a fairly strong footing. There are a lot of things that have happened positively for us,
Mhm.
right? While there are certain things which are negative on the global macro side, right? So we are not a nation which is completely isolated from what's happening in the global economy. There are geopolitical risks. So you've seen क्या हो रहा है with Russia, Ukraine, and there are other region specific risks also. And then there are also risks when you look at some of the Western geographies, wherein the economies are struggling for growth. There's also a big problem of inflation that all the economies are struggling with. And to solve that issue, they don't really have a choice but to take up rates. And when rates go up, you try to tackle inflation. You know the problem that comes with it. So there is a bit of trade-off in growth that happens. So for the time being, you are okay. Governments here decide करती हैं that they will bring down growth a little bit. That's fine as long as inflation does not go out of hands.
Correct.
So that is where we are. There is a lot of global macro impact that India is also bearing. There is no doubt about that, and every geography, every country, every region is bearing that. But from a business standpoint, from an economy standpoint, India has done a lot of work, right? We've had many policy changes, we've had many reforms on the ground, and therefore we are on a strong footing right now. So, Bazaar kya bolta hai is very simple that be mindful of what's happening outside. The problems can come onto you also if things deteriorate. You are not isolated, you are not completely disconnected from the world, but also be very careful that these are times when you can pick and choose stocks, you can invest in businesses which have very solid fundamentals. And as the cycle comes back, as things improve eventually, right? We are all optimists at the end of the day. We expect things to improve. And as things improve, these businesses will generate a lot of value for you. So I think this is a very exciting and interesting time for existing investors, for new investors to come in and build up their positions, build up their portfolios, strengthen their portfolios for the good times that we will eventually see.
Correct. Absolutely. So, would you, extend the same, feeling when it comes to, or the same message when it comes to the IT tech space, IT/tech space? whether domestic, global. So what's your reading on the situation there? Because global tech seems to be narrating a very different story at this point in time, and domestic tech, which is largely IT to an extent here, is having a different narrative or experience at this point in time. So what's your reading on that segments?
So Nirav, what I'll do is I'll first talk about the business per se, and then we will come to what's happening in terms of investing, right?
Correct.
Uh, See, अगर हम 2 decades 3 decades पीछे जाएं और हम देखें what were the businesses that were surviving that time or thriving that time. There used to be globally, that used to be banks, core economy sectors,
Hmm.
energy sectors, etc. And over the last 20 30 years, we've seen the emergence of technology,
Correct.
right? And this is across the board. At
Hmm.
the end of the day, today, if you look at some of the companies which we call as tech companies, have actually come out from those sectors which used to be the stronger sectors of several decades back,
Hmm.
right? So you have tech companies like Apple, which are essentially in electronics and manufacturing. You have companies which are in retail. Amazon is a strong
Hmm.
retail company, right?
Hmm.
So what is happening is that the emergence and dominance of tech is only going to increase.
Hmm.
It's not going down, and this
Hmm.
is emerging from the fact that as users, you and I, everyone is spending more and more time on tech devices, right? The
Correct.
amount of screen time we have, the amount of time we spend on, be it our laptops or phones or iPads or tablets, etc. There's a huge amount of time that you're spending over there. Now,
Hmm.
when you spend more time on these devices, this becomes your medium to interact with the companies, and therefore the commerce moves here, right? So, so then what happens is that your business economics are changing. Earlier in the past, where a customer used to walk into the store and you could sell them 20 different things, today my customer is online.
Hmm.
If my customer is online, I have to reach out to my customer
Yeah.
online,
Yeah.
right? And this creates a big disruptive force in the overall economy.
Hmm.
Overall, you take business by business, sector by sector, micro sectors, companies which can leverage technology can actually come in and disrupt businesses altogether. Like for instance, you have food delivery companies.
Right.
They're essentially in the business of food, right? It's food
Right.
tech, but they've come in and created a big disruption out there.
Yeah.
So these things are never going to change unless people decide, or unless there are certain forces which make people
Hmm.
spend less time on tech, less
Hmm.
less time on their mobiles or screens,
Hmm.
etc. And this is exactly what has happened in the West, and this wave is still very strong over there. And this
Hmm.
is happening in India also with the emergence of these new applications, technology, whether it's business to consumer or business to business.
Hmm.
Um, this trend is only increasing. The
Hmm.
only difference I would say in India versus the West is the movement of commerce.
Hmm.
Now, today, you and I can say that, okay, 70% of my people in the country have access to internet. Does that
Correct.
mean that the leftover portion is only 20-30% and that's the total headroom in terms of growth available to us? But that's not the case, right? It might be a similar level of penetration in the US also. But the
Hmm.
difference is what percentage of the consumer's wallet spends have
Yeah.
moved online. And that's a very small fraction in India versus the US. I mean, even in the US, if you look at the overall market, it's still not a very large fraction of spends which have moved online, right?
Correct.
And this is where businesses are finding opportunities, and businesses will continue to find opportunities.
Hmm.
So, as an overall wave, these things are not changing. Now, let's take some lessons as to what has happened in the US, what has happened in China. Largest companies in the US in 1990s or early 2000s were not really tech companies. But today,
Hmm.
if you were to take a list of top 10, top 20, top 30 companies
Hmm.
in the US or in China, you will find a lot of tech companies over there, right? That is because these companies have the ability to not just disrupt an existing sector, but they can enter newer sectors, they can create newer products, they can enter into newer optionalities, they can enter into newer synergistic sectors, peripheries, right? As we call them, and create a huge business out of that. For
Correct.
instance, look at Apple, right?
Hmm.
20 years back, there was no iPhone, no iPad, but
Hmm.
today you have so many peripheral products.
Correct.
Look at Amazon, so many newer things that they have come out with,
Yeah. Yeah.
right? So what happens is their growth opportunity keeps on improving as and when they enter into newer sectors. And this is exactly the same kind of behavior that you've seen with the Indian companies also,
Mm.
right? There were certain companies in food discovery space, and those
Correct.
companies expanded into food delivery. Today, they are getting into grocery delivery. They are expanding
Correct.
into, they'll get into maybe electronics delivery at some time. You don't know. But the idea is that they keep on looking at newer and newer areas where they know that the consumer is moving, the spends are moving,
Correct.
right? And these are very long term waves. These are not 1 year, 2 year, or a decadal wave. This will continue.
Mm.
Now the question is, what happens with this? So then what happens with this is that even the traditional companies,
Mm-hmm.
the core economy companies also start to look at tech as their differentiating factor,
Mm.
right? Today, all your electronic devices, people are connecting them with the likes of Alexa or other home management apps.
Mm.
People are introducing technology in the traditional devices, like
Mm.
your or traditional electrical equipment, like your
Mm.
fans, ACs, etc., and
Mm.
making them more intelligent. And that's becoming a point of differentiation for the
Mm.
existing businesses also, which have survived for 30, 40 years without too much of technological change, right?
Correct. Mm.
So this is happening across the board.
Mm.
And whatever happens on the ground, whatever happens with consumers or businesses, actually eventually happens with their fundamentals and their performance also.
Correct.
And this is something that we as investors also track and we find value. And
Mm.
every investor will track that. At the end of the day, wherever the commerce is moving, the value will move there. Now, coming to the investing side of it, right? Uh, think about it like this. Even the rates are very low in the
Mm.
economy.
Mm.
Typically, the propensity to take risks, the propensity or the ability of people to take risks, be it individual investors or be it institutional investors, goes up
Correct.
because your what is your the other opportunity or what is your alternative available to you
Yeah.
for every unit of risk, how much of return you can generate, right?
Correct.
And we have over a sustained period of time, we have seen that rates were very low, so people
Mm.
could give a lot of equity handouts to companies which were disruptive, which were innovating. And we've seen emergence of a lot of other newer companies which have come up over the last decade or so across the world.
Mm-hmm.
Now as rates go up, typically the risk averseness increases, and what happens is that uh, I would say that investors become a little more choosy,
Yeah.
and they ask for different things from their investments, expect different things.
Yeah.
It's not just growth, but you also expect cash generation, you expect
Mm.
profit generation, and you
Correct.
expect that the companies which have been on the forefront of uh, tech disruption, which they
Mm.
still are, not just think about growth and getting into newer businesses and all, but also balance it out,
Mm.
that you also generate some profits, you generate some cash, and become more sustainable than what they were in the past, and not
Correct.
depend too much on equity money. One interesting piece about tech investing is that you would have seen that most of the new age tech companies have were in the past funded by equity.
Mm-hmm.
They were not funded by banks
Right.
or debt in general, right? So the
Correct.
proportion of investments that go as equity in these companies is very high. And
Mm-hmm.
typically, then when the equities in general get impacted
Mm.
because of maybe volatility or risk averseness, or in general people becoming a little more cautious, the
Mm.
impact will be outsized here.
Correct.
And because this impact is outsized, you see valuations coming down.
Mm.
But then the good on the flip side, the positive piece of this is that you are getting companies, you're getting potential at very low valuations. So
Correct.
should you look at it as glass half full or glass half empty, right?
Yeah. Yeah.
And we have seen that these cycles play out several times. Now, if we believe that eventually economies will stabilize, inflation will also come under control, the world will be, these geopolitical risks will also go down,
Mm.
then the risk taking propensity or risk propensity of people will also go up, and
Correct.
rates will come down.
Correct.
And those innovators and entrepreneurs, the larger companies which are also being quite entrepreneurial,
Mm.
will eventually come back full steam.
Correct.
Today, they might be a little more calibrated because they want businesses to be sustainable. But
Correct.
the aggression towards innovation, the aggression towards new products, businesses, etc., will go up again.
Yes.
And again, you will see, growth, capital chasing growth, capital investments chasing growth.
Hmm.
These companies have a lot of potential, have a lot of value if you look at them from a longer term perspective, and that will happen again.
Correct. Correct. Right. So, but Varun, like while you were saying this, I couldn't help but think about the fact. काफी बार ऐसा होता है जब हम एनालिस्ट से भी बात करते हैं या इन्वेस्टर्स से भी बात करते हैं, एक एक बहुत ही क्लियर डिस्टिंक्शन दिखता है एक नरेटिव में और टोनालिटी में जब भी टेक के बारे में बात करते हैं इन द ग्लोबल पार्लेंस इन टर्म्स ऑफ ग्लोबल स्टॉक्स यूएस टेक basically that's like an innovation driven growth chasing sort of a play वहाँ पे. And whenever we talk about India tech, barring the past couple of years, जहाँ पर the new generation consumer tech companies have started really cropping up, even after that, largely tech is used, rather loosely as a substitute or a synonym for IT services, right? And because of this distinction in nature, काफी बार माना जाता है कि जो ग्रोथ प्लेस होता है उसके लिए यूएस टेक में इन्वेस्ट करना चाहिए और जो डिफेंसिव प्ले है उसके लिए इंडियन टेक में व्हिच अगेन इज अ लूजली termed synonym for IT services. So what is the distinction? See, because you are managing a fund which is amongst the very few funds that manage to effectively have an exposure to US tech stocks, or rather global tech stocks, as well as domestic tech stocks. And so, my expectation, like what is my expectation is really riding on the fact that you have, immense and great perspectives on both sides of the chart, right? कि India में क्या हो रहा है वहाँ पे. So if you could bring that to light a little bit, कि what is the distinction and what are the distinct opportunities on both the sides that will really help build a great portfolio?
Sure. See, I mean, let's look at it like this: that we as Franklin Templeton have a big advantage. That
Hmm.
we are a global company, and there is research happening all across the globe,
Yeah.
right? Any be it the mature economies or be it the emerging economies, we have analysts sitting everywhere.
Correct.
Uh, they are covering companies, economies in great detail, and there are very frequent interactions between us and them. In fact, everyone, and then we also have the research available of these analysts on a common platform.
Hmm.
So what this tells us is that we that there is an advantage that we can leverage, because for all the investments that we make, we know that there is an analyst who's covering these stocks, has a very detailed view of the company, of the business, and from the modeling standpoint, research standpoint, also everything is covered. So your confidence of investments uh, in countries beyond India is also very high when it comes to
Yeah.
this, and that's one advantage that we tend to leverage.
Hmm.
Now, coming to the other point, see, no two markets are typically same when
Correct.
it comes to the construct of businesses and even construct of indices, right?
Yes.
Now, it has just so happened that in India, the IT services businesses or
Hmm.
companies have grown very, very fast over the last couple of decades, right? And they've become big.
Yeah.
But uh, which is not something that we have usually seen beyond some of the Western geographies, right?
Yeah.
So when you look at emerging economies, it's India has a very big IT services market,
Hmm.
while a lot of I would say tech in general, there are a lot of things on the consumer side, business side, etc. Tech products, platforms, internet businesses, they are still in the nascent stages in India,
Hmm.
right? So it's
Hmm.
just the mix of uh, I would say the overall tech, which is
Hmm.
different in India versus the rest of the world, right?
Correct. Okay.
But that does not mean that the Indian uh, overall tech industry will not evolve. That is what I was highlighting in my
Hmm.
initial remarks, that Indian tech industry is also quite nascent when you look at it beyond IT services. IT services is scaled up very well, and we are quite proud of it, right?
Yeah. Yeah.
But there is a domestic industry, there are products, there are platforms,
Yes.
There is software in general,
Right.
uh, and even business B2B tech is picking up very well.
Yes.
So
Yes.
these are great opportunities, avenues which are opening up for us to invest in.
Mm-hmm.
The good part is that because we've seen that, and we are seeing that even now happening in other geographies, which are obviously ahead of us when it comes to tech intensity or tech adoption. We can take learnings from there. We have analysts who are doing detailed research in these areas, and that gives us a lot of learning to apply to India.
Mm-hmm.
And that is what you would have noticed in our fund also, that that is
Yes.
something we are trying to actively tap.
Yes, yes, and I must say you are doing it pretty effectively. It is giving investors quite the opportunity. Through the tech fund that you're managing. So, when I was asking this question, शुरुआत में, I also mentioned about the fact कि हम जब भी बात करते हैं तब आईटी सर्विसेज की बात करते हैं, बट काफी ऐसे न्यू एज कंज्यूमर टेक कंपनीज भी क्रॉप कर रहे हैं. एंड माय नेक्स्ट क्वेश्चन इज इन लाइन विद द fag end of this previous statement. It is about the new age consumer tech companies. So, we have noticed ki, while the fund is mandated to invest in technology funds, there are many funds that are also averse to, taking any sort of bets on such new age consumer tech brands, like for example Paytm, let's say, or a PB fintech, which clearly in your portfolio, the exposure is not alarmingly high, but it is growing at a steady clip. So there is some sort of semblance that there is a fair and reasonable confidence in the story that's being played out there. But the biggest bone of contention with these stocks is इसका valuation कैसे करेंगे? पैसा कहाँ बन रहा है? कोई ट्रेडिशनल कन्वेंशनल मॉडल चल ही नहीं रहा है. सो जब तक प्राइवेट इक्विटी वाले इसमें इन्वेस्ट करते हैं तब तक उनका जो मॉडल रहेगा वो काम करता होगा, बट द गेम चेंजेस एंटायरली. द गेम टर्न्स ऑन इट्स हेड एज सून एज दी स्टॉक्स एंटर द पब्लिक मार्केट्स. राइट, पीपल हैव देयर ओन नोशन, देयर ओन स्टाइल्स. बट ये सारा कुछ होते हुए, you seem to have developed some conviction into some of these stocks. So, I would really love to hear some perspectives and insights on how do you approach evaluating such opportunities, because at the same time I also see bets are very reasonably sized and very well thought through. ऐसा नहीं है कि just because it has something to do with tech it finds a place in your portfolio. There is some very solid and deep research and thought going behind it. So we want a sneak peek into that thought.
Sure. So see, a couple of things I'll tell you upfront, and then I'll maybe get into um, the valuation side of it. See, I personally have more than a decade of experience in tech research, valuation, investing, um, and we also augmented. We knew that it is important that uh, we need more insights. We need to go deeper into research into this area. So we also augmented our research team a couple of years back, just to make sure that we have the right depth of understanding of these businesses
Hmm.
before we invest in them. And just like I told you, now these tech businesses span across sectors. It is not
Yeah.
just one particular sector that you could replicate your knowledge, but you have to understand the core business, the core sector, and then understand the tech piece of it.
Hmm.
So that is something that we had done quite proactively. But now coming to see, uh, like, coming back to my initial remarks here, right, and connecting it with that, uh, these have been big waves in the US, in China, in many other geographies, right? The tech businesses. So, and we know the fundamental reasons as to how they have grown,
Yeah.
and we also know that uh, for a very very long time, many businesses did not make money, right?
Hmm.
Yet their overall value, their overall, I would say the connection with the economy, with businesses, consumers, etc., also kept going up. Does that mean that we wait for the period when they actually start making money to invest in them? But you would have missed the bus by then, right? So how do you basically invest in these companies knowing that they will be making losses for some time, right?
Correct.
That is where I would say if you look at the research of the past, which is publicly available into valuations of these companies, there has been a big, I would say, gap, that there are no established frameworks that you could just simply apply on these companies and say, I mean, great value, or you could say, uh, I, I don't know where this will go, right? So what happens is that you have to embed a lot of behavioral aspects into your research and value of these companies
Yeah.
to be able to appropriately value them, right?
Correct.
Now I can point. I mean, if I were to prepare a list of all of these, which we already have, you know, uh, it'll span into, I can tell you 40, 50 different aspects. But
Yes.
let me tell you a few which you will be able to quickly appreciate, right?
Yeah.
See, uh, think about it like this: these are businesses which are reaching out to each and every customer, right? They're pervasively available.
Correct.
And you compare that with let's say a traditional company which typically operates through distributors and retailers, their physical presence or the ability of customers to buy into those products, right,
Mm.
is limited by the physical presence of those businesses. But because
Mm.
a lot of these online businesses are available pervasively everywhere, so you have
Mm.
touch points everywhere, right?
Correct.
Then, which means your market is everywhere. You can't
Yeah.
create a local market. I mean, you can't have an internet business flourishing only in Mumbai and expect that business to continue and gain scale, and that business not being there in a Bangalore or a Chennai or Delhi, right? So you can't
Mm.
expect that. You expect them to be at least present everywhere in the country, if not go global,
Correct.
which essentially means that reaching leadership or a very high dominant market share. Now, we do have from our internal research a number, um, right, across sectors that this number needs to be achieved for somebody to for us to feel comfortable that yes, this business has a very low mortality risk
Yeah.
now.
Yeah.
They are leaders, and now it's now the you know the prime of the battle has been fought. And now let's focus on unit economics. Now let's focus on how they can generate value in the longer term. The good
Yeah.
part is that some of the valuation frameworks still work here. That's a good part. When you and the most likely framework has to be a long-term oriented framework, right? So you can't look at shorter-term frameworks of valuing companies, and this is something that we at Franklin Templeton always practice, that we look at longer-term frameworks of valuation, right? The other thing is that I can tell you is that the other thing that one needs to look at while evaluating these companies is the efficiency of these companies.
Yeah.
Is this a company which is the most efficient in the market? So if you let two Goliaths fight amongst themselves, which company will win, right?
Yeah.
And especially in this environment where we know that capital is quite dried up,
Mm.
uh, we need a company which is the most efficient, right?
Correct.
So there are multiple parameters that have to come together for us to buy into something, right?
Correct.
The other thing is that they are so dynamic that
Mm.
if I were to, it is possible that I have invested in a company today, which I may not have invested maybe a couple of years
Mm.
back, but the
Correct.
business has changed. The business is so dynamic, right?
Mm.
Fundamentals have changed. Maybe they have found the secret sauce, something like that, right?
Yeah.
And
Yeah.
and maybe if they've established leadership. So
Mm.
there are so many things that keep changing in these businesses at such a fast pace. That is where your observation was quite astute, I must say, that the weightages of these stocks and companies plays a very important role as to how you play them.
Mm.
And that is where we have senior fund managers who have years of experience into these things, and we
Right.
get a lot of learnings from there, that how to appropriately weigh them in the portfolios.
Correct. Correct. Absolutely. I feel that was superbly insightful. And, talking about the fund, it has also, I couldn't help but notice that even the global exposure, and the weightages to certain, uh, themes within the global, on the global side has been quite interesting, right? Couldn't help but notice the sort of preference towards semiconductor as a theme, semiconductors as a segment, not as a theme, e-commerce as a segment, and cloud AI specific orientations happening on the global side of it. So these are some very interesting allocations that have been made on the global side of tech also. So I feel I was really excited about uh, this new age consumer tech investing, and you have given me a whole lot reason to continue being excited about the prospects that the segment hold. Now this is the the second leg of my excitement as to ये जो सारे themes है, semiconductor, e-commerce, cloud AI, ML, big data sort of themes that are being played out and also very effectively positioned within your portfolio itself. That leads one to think कि जो बहुत ज़्यादा amazing growth stories है tech में, और fast developing, alpha generating sort of, I wouldn't say alpha generating, but really fast, needle moving sort of place जो है वो सारे ग्लोबल साइड पे हो रहा है, राइट? अगर आपको ये लिस्टेड स्पेस में अपॉर्चुनिटीज चाहिए, you want to tap into the AI growth, you are not going to get that as much in India as you would get it in the global segment. You want to play the semiconductor side. We all know that India has just barely one or two companies have set up shop in house, and they are going to develop that segment. So most of it is outside. You have Taiwan, etc., playing lead. So अगर मुझे टेक खेलना है, so why have any allocation to India at all? Probably if I'm a really, really growth tech sort of a guy, why should I not, or rather, why should I, in either ways, orient my portfolios just towards global tech? And probably, if I'm not very savvy, I, instead of going for a thematic global ETF, I may take a broader basket like Nasdaq 100. Why isn't that not probably the best approach? Or if it is, why is it? So how should I go about thinking on or deciding between domestic and global tech?
Right. See, two, 3 points here. See, one
Mm,
thing is that we did put IT services, a lot of companies under the umbrella of IT services, right, together.
mm,
But we can also double click on that part and see that there are many portions of services, I would say business services or tech services, that are also growing at a very fast pace, right? And there are companies which are tuned to those themes as well. Like, for instance, you have companies which are doing a lot of product engineering services growing at a very fast pace. You have companies which are into engineering services, and then within engineering services also there are certain verticals which are growing at a very fast pace, right?
correct.
So, so while we may put everything under the broader ambit of tech services, there are portions or micro segments which are growing very fast. So one is that we don't have to take sight of away from those things, right?
Mm,
So within India also, within the services pieces also, there are companies which are growing very fast. So that presents us an opportunity. The other thing is, like you rightly articulated, there's a lot of tech innovation that's happening outside of India, right?
yeah.
And this is also because of two things. See, this was a reason why we decided to go out as well in terms of investments. Then this was one of the reasons. The other reason was that, see, even in India, a lot of these prevalent companies are actually the global companies,
Mm,
right? So if you look at the social media in India, it's essentially the US organizations which are dominating it. If you look at the retail e-commerce in India, it's again some of the US organizations which are dominating it.
mm,
Uh, Whether it's business services or software, again it's some of the global organizations which are
mm,
dominating it, right? So one is that even if I have to play the India story,
mm,
I have to in play it through some of these organizations which are dominating in India right now and going to get the benefit of India tech, I would say penetration in their
correct.
businesses, and I can get it through their stocks. That
Mm,
is one reason. The other thing is that if you look at, like you rightly said, if the innovation and disruption is happening outside, why not just look outside, right?
mm,
Um, yes, in fact, I'll tell you, I had carved out this list of tech companies a couple of years back, and I'll tell you that list was just expanding and expanding. And last I checked, it was about 1,500 companies, right? So you can imagine the kind of research bandwidth you need to be able to pick the best stocks out of there. So
yeah.
invariably, uh, the space is so large that you will have to first. uh, pick the pockets that you want to play in,
Yeah.
right? And then pick and then pick the best of those pockets. And
Correct.
that is where you need so many research analysts, which is the bandwidth that we have and we can afford across the globe, who can tell you that these are the pockets which are exciting and these are the companies which can help you generate that value, get that value. Because if you were to take a very broad based kind of approach to this,
Mm.
then let's be also mindful of the fact that this space is has a lot of mortalities, right?
Correct.
Now, if
Correct.
you invest in a company which is inefficient, and if you invest in a company which is not a market leader, if you invest in
Mm.
a company which has mortality risk, for every percentage point return that you will make, you will also lose a percentage point,
Correct.
which you don't want
Correct.
to have. You don't want it to happen, right?
Yeah. Yeah.
So the need for bottom-up investing, the need for figuring out value in this space actually goes up materially as compared to certain other sector where you have a lot of established businesses,
Mm.
right?
Mm.
Because I mean, let me give you a simple example. An industrials company operating out of a very localized region can still
Mm.
survive and would have survived for several decades and may
Mm.
continue to survive for several decades.
Yeah.
But you can't really extend this luxury to a tech company which might get disrupted 2 years from now, right?
Absolutely.
So, so the intensity, research intensity that you need in this space is humongous. And the more you try to broad base it, the more mortality risk also you will be assuming, which you don't want to take, right?
Correct.
So that those are the differences. Uh, the good part is that we have analysts who can tell us which are the best of breed companies, how you can play it, where you can play it, and we continue to do that. But we'll
So,
have to
so
be
like,
calibrated.
yeah, it's like a very thorough top to bottom sort of an approach. And also, in a way, probably also, racing against time because developments happen at such a fast pace in the industry. And, there are so many things happening that by the time you arrive towards the end of a large drawn project, the dynamics have changed completely. So you really need to also keep the pace, which I can imagine is, quite a, intense regimen to follow. So absolutely, I can totally see where you're coming from, and so this approach really makes sense. And that's probably the reason why this fund has been doing so well. The I would say it's a really effective portfolio, and the construct is intriguing. So talking about intriguing, Varun, we'll go slightly off this conversation बहुत serious हो रहा था, and I realized that I wanted to also just ask this question, so I won't hold back. uh, you have been researching tech stocks, domestic tech, for a very long time, almost over a decade, right? You say. According to you, which not according to me, but which was your फर्स्ट लव इन द इंडस्ट्री? एक हमेशा एक एनालिस्ट का एक वो पहला या एक वो स्टॉक होता है जो उसको हमेशा ही बहुत ही इंट्रीगिंग लगता है. इट मे बी वेल पास्ट द करंट टाइम, रेलेवेंट नहीं रहे, बट स्टिल what was that one stock, or which may continue to be, that continues to intrigue you?
See, I mean, more than a stock, I think it's the philosophy because if you
Yeah.
go back 10 years or 12 years, you would see that there were not many companies listed in India in the
Yeah.
internet space, right?
Yeah.
Frankly, if you were to look at it that time, I think the first company that got listed was InfoEdge.
Hmm.
And then I think around that 2010-11 time frame, we had the second company, Just Dial, being listed. And over the last 4 or 5 years, we've seen that a lot of internet companies have come in,
Hmm.
right? Now, see, I can go back and talk about this company maybe 10 years back. I really liked InfoEd's model that time.
Hmm.
That uh, and there was a reason behind that, right? Because see, there was no way for any investor in India to take a broad-based exposure to internet sector
Correct.
as a sector, right? What InfoEdge accorded to you was that you had several companies, several businesses uh,
Hmm.
in that one particular stock because their
Correct.
core businesses were also there. At that time, you had the recruitment classifieds, you had real estate classifieds, you also had matrimonials, plus a
Hmm.
few more businesses in the
Hmm.
company itself. And on top of it, Today, what we realize is what have come out of their portfolio is a Policy Bazaar and Zomato, which were investments made almost a decade back, right?
Yeah.
So the kind of value they have been able to capture uh, from that time till date has been huge, and that's a see. You didn't have many choices that time, and if
Yeah,
you
yeah,
wanted
yeah,
to take a
absolutely.
broad-based exposure to internet, there was actually no other option
Like,
available to
like,
you.
like you said, yeah, there's no other option. InfoEdge was probably not just the best bet, but probably the only bet that you could have taken at
Yeah.
that point.
So that was the only bet, and I think from a business standpoint, they've delivered,
Yeah,
uh,
yeah.
right? So I think I could say not without too many choices that that was one company we saw do a lot of work in this space.
Okay, absolutely. So वरुण, as we are talking, काफी लोग हैं जो बहुत सारे questions भी पूछ रहे हैं. So as we move towards the fag end of the conversation, I would also like to very quickly pick up a few questions that our viewers would like to hear your thoughts on. So the first question would be around: do you think the current valuations of the Indian IT sector is good enough for us to start investing, or is there some time before we could actually start building exposure?
Okay, so I'm presuming we are talking about the total tech per se and not just IT services.
Yeah, yeah,
Uh,
totally. Even I'll
see,
assume that.
yeah, see, there are sometimes waves that come, and every stock, every micro sector gets, it rises with those waves. And then there you have certain times when waves are towards the downside, so everything corrects. I think we are in a frame uh, right now wherein we have to be very very choosy about the investments that we are making. uh, there are certain areas which are in terms of potential deteriorating. There are certain areas which are improving. There are certain areas, like I said, which are nascent in terms of uh, where we are as an economy. Uh, the only thing what I've noticed is, see, in the learnings from the past is that if you look at some of the other geographies and you look at tech per se, uh, things change very fast, right? So something that appears very, very overvalued at some point of time suddenly becomes undervalued because the product clicks or a new innovation clicks, right? So in that sense, as an investor, you would always want to have that optionality on your side, that there is a business I'm invested in. This business is very, very innovative, is
Hmm,
disruptive. They are very high on tech. The management continues to think about growth, getting into newer businesses, strengthening the existing areas. And if you don't have that optionality on your side, you will miss out on it,
correct.
right? For instance, I can give you an example what happened with Amazon Web Services and what happened for Amazon through that, right? So the whole idea here is to be a little more disciplined in terms of investments, not to be shaken down when valuations correct, but to take a more longer term view that
Hmm,
this valuation correction is going to benefit you in two ways, right? One is that you get more value, and second, that whole disruption piece, that whole tech piece is in your favor. Because if one of your companies or two of your companies or a large set of your companies deliver on that, you benefit by that value generation.
hmm,
So I think whenever valuations correct and all that, it's always a good time to buy into it. But we have to keep in mind that we are buying companies uh, which have longer term horizon in terms of growth and
correct.
are also giving us value today.
Hmm,
There are certain companies which you buy when you feel that there is value, but I may or may not have a longer term growth at this price. So one has to take a more calibrated call at that point of time. So I think we are in that frame where we have to be very, very careful about what stocks we are picking, and we have to go after those companies and stocks where we see longer term value generation.
Correct. Correct.
And then the
Absolutely. I
pace
feel.
of it also matters, right?
Yeah.
I mean, a stock doubling, or rather a company's business doubling in 3 years versus a 6 years, it makes a huge difference to the portfolio returns.
Absolutely. Absolutely, yeah. I feel that was pretty well elaborated upon, and I feel the next question is almost a natural progress on the same lines. Is what is the biggest risk slash threat that the tech sector faces today?
See, the biggest risk is if all of us, I'll take it on a lighter note, that all of us as humans ditch our phones and iPads and our laptops, etc. Everything, throw them away or start spending lesser time on that.
And the irony
Because
is that you heard about this on your laptop or your phone.
so see, coming back to what I was saying, as long as the consumer, see, wherever the consumer is, the business will chase them,
Right.
right? The businesses are neutral towards the platform,
Yeah.
and businesses will also accustom themselves, modify themselves to chase their customers. Now,
Hmm.
if you are spending 9 hours, 8 hours, 5 hours on digital devices, there is no point a business trying to chase you in a park somewhere, or in a I would say in a shop somewhere where you're going to spend a very small fraction of your overall time during the day, right? So the tech intensity is only increases is going to increase.
Hmm.
And in fact, if you look at the number of devices per home per person, it has
Hmm.
increased massively. I would say smart devices per person per home has increased to, at a staggering pace over the last 5 years.
Hmm.
And I can see that you're wearing a smartwatch as well.
Yeah.
In no time, the businesses will start targeting you through that as well.
Oh yeah, I'm looking forward to in a way. So absolutely, I feel Varun, the world is progressing, and there was this concept also, right? Almost textbook when we were studying about the concept of mean reversion, as to how companies, stocks eventually revert to their mean and sort of things. There is also a very strong theory on how the only exception to mean reversion is when technology or technological advancement gets into the picture. As long as mankind keeps progressing in terms of technology, the world will not revert to mean. The mean will keep shifting higher and higher, and everyone will just be left hoping that it'll revert to someday, but it'll only shift higher. I feel this conversation was quite an eye opener on a variety of subjects. Varun, I personally had a lot to take away from this conversation. We have moved towards the end of the conversation. There are a lot many questions, but guys, as always, once again, due to limitation of time, we won't be able to pick all of that. But feel free to write to us at research@fisdom.com. We'll see and try and help in whatever way we can. Back to you, Varun. I feel some of these insights, in fact, all of these insights were amazing, but some of these were absolute, gold for us. So, I'm sure that many of our viewers are going to rewatch this conversation and, uh, you know, implement a lot many things that they could implement in their portfolios. So thanks a lot, Varun. This conversation has been pretty insightful and wholesome, and thank you for taking the time out and sharing your perspectives.
Sure, Nirav. Thank you so much. It was a pleasure in interacting with you as well.
Thank you, Varun.